All right, let's talk about trust. Specifically, trust in numbers. We're diving into the hidden system that's supposed to make sure that when a company reports its financials, we can actually believe them.
I mean, think about it. You see a headline that some company made $1 billion. How do you know that's real? What's stopping them from just making it up? This is the huge problem that the entire world of financial reporting is trying to solve. To really get how the system works, you first have to understand the massive debate at its very core. It's a fundamental disagreement about what financial information even is and who should get to control it. And it really boils down to two main camps. On one side, you've got the free market view. They see information as just another product, shaped by supply and demand. But on the other side, the pro-regulation folks argue that, no, it's a public good, something so essential that it needs rules to protect it. So, let's look at the free market argument first. The idea here is that good companies have every reason to be honest on their own. Why? Well, they need to prove to their owners that management is doing a good job, and they need to attract investors to get capital. So, to stand out from the crowd, they'll voluntarily share good information. The market, in theory, rewards this transparency. But the other side pushes back hard. They say financial info is a public good. The best analogy is a lighthouse. Once that light is on, any ship can use it to navigate safely, but you can't exactly send every single boat a bill. It's the same with company information. Once it's out there, competitors and analysts, the free riders, can use it without paying a cent. And because of that, companies won't produce enough of it. Without rules forcing them, they argue, the market just fails. So, where did Australia land in this big debate? Well, we landed firmly on the side of regulation, and our system is built around four key players, a team of guardians, really, designed to protect the integrity of the market. You can see here how they all fit together. It's not just one group with all the power. It's a whole system of checks and balances. They all have their own job to do. So let's break down who these four guardians are. First up, you've got ASIC. The best way to think of them is as the cop on the beat. They're the watchdog. They enforce the big laws, like the Corporations Act. If a company steps out of line, ASIC is the one that's going to come knocking. Next is the AASB. If ASIC is the cop, then these are the folks who write the rulebook. They're the technical experts who create the super detailed accounting standards. And these aren't just suggestions. They have the full force of law. So who watches the rule writers? Well, that's the FRC, the overseer. Their job is more high level. They appoint the people to the AASB and basically make sure the whole rulemaking process is working the way it's supposed to. And finally, there's the ASX, the market gatekeeper. If you're a company and you want your shares traded publicly, you have to play by their rules. And one of the biggest ones is continuous disclosure. You have to release important market-sensitive info right away. Okay, so we've got the regulators and all these rules, but what's it all for? What's the one single principle that every financial report is ultimately judged by? This is it. This is the bedrock, the absolute cornerstone of the entire system, straight out of the law. It's not just about ticking the boxes and following the rules. At the end of the day, the numbers have to present a true and fair view. So what on earth does true and fair actually mean? Well, it boils down to three big ideas. The information can't be biased. It has to show the real economic story behind the numbers, not just the legal paperwork, and it has to be complete. Of course, complete doesn't mean telling investors about every single paperclip the company bought. Can you imagine how long those reports would be? No way. That's where this crucial idea of materiality comes in. It's a filter. Information is only material if it's big enough that leaving it out could actually change an investor's decision. It keeps everyone focused on what really matters. Now, to make sure all these rules are consistent and actually make sense together, the rule writers at the ASB don't just wing it. They work from a foundational document. You can think of it as a constitution for accounting. It's called the conceptual framework. And yeah, the blueprint analogy is perfect. You wouldn't just start building a house without a detailed plan. And you can't build a solid set of accounting rules without a framework to guide every decision. This document lays out all the core ideas and principles. Having this blueprint is a huge deal for three main reasons. First, you get more consistent rules. Second, it holds the rulemakers accountable. They have to justify why they're doing what they're doing. And third, it's just way more efficient. You don't have to re-argue the basics every time a new accounting issue pops up. So what is the single biggest goal of this entire constitution? It's right there.
to provide information that is useful for making decisions. And notice who it's for: investors, lenders, and creditors. The whole system is designed, first and foremost, to help the people who provide the money.
Okay, so the goal is useful information, but what does that really mean? The framework actually breaks this down into a whole hierarchy of qualities that good information should have. At the very top, there are two must-haves, the fundamental qualities. First is relevance. Can this information actually make a difference to a decision? And second is faithful representation. Does it paint a complete, neutral, and accurate picture? And sometimes these two are actually in conflict. A forecast about the future could be super relevant, but it's never going to be as accurate as a number from last year. And then, to make that useful information even better, there are 4 enhancing qualities. It's more useful if you can compare it across companies, if someone can verify it, if you get it on time, and this is a big one, if you can actually understand it. And that kind of brings us to the big final question. This entire complicated system we've just walked through, all the guardians, the laws, the framework, it is all explicitly designed to serve one main group: investors. But in the world we live in now, you have to ask yourself, is that enough? What about a company's responsibility to everyone else, its employees, its customers, or even the planet? That's the question that's really shaping the future of all of this.